What's going on, YouTube? Quick question for you guys. How do you know when to buy a stock that you want to invest in? Good question, right? So, there are 5 things that you need to know before you invest in any particular stock. All right, let's go ahead and jump right into it. Let's go to the charts. All right, so let's look at Apple. Let's just say that I've already done my due diligence. I've already looked at the financials and everything, and I know that this is a good company that I want to invest in. So what do? All right, so we come into our trading platform, whether that be Schwab, Robinhood, Webull, Moomoo, whatever that may be. All right, and first thing you want to do is, first of all, let me go ahead and get rid of these moving averages. All right, hide those. First thing you want to do is you want to make sure that you're looking at candlesticks. All right, you go to your candlestick or your line style in Webull, and you can change it to whatever you want. Normally, when you first open up Webull, it's going to be in a line chart fashion. So you want to change that to candlesticks. Okay, they do have you have two different types. You have hollow candlesticks, and then you have your traditional rectangular body candlesticks. I prefer these, so let's just roll with those. All right, and let's go ahead and delete all these drawings. All right, boom. All right, so we're starting fresh. Okay, so the first thing you want to do is you want to make sure you're on the right time frame. Okay, so we want to look at as much data as we possibly can. So I like to start with the weekly, or sometimes even the monthly time frame. All right, so that way you can get an idea of what the stock has been doing. All right, you can see that it's been trending up over time, right? So you can go ahead and grab your trend line, and you want to grab the lowest point. Let's see, let's go here. It's our lowest point there. And that shows us our trend. All right, so it's really easy now to see, okay, where your major support and resistance is. Okay, I don't want to move too fast, but we want to move to understanding levels. All right, you got to understand levels. So in order to do that, we've already established that we're on the right time frame. Okay, we're in the monthly, that's a higher time frame. So now we're going to go ahead and get our horizontal line tool. We're going to put that down here. All right, so that's our lowest support. Okay, and then our highest support. Let's do this so we can stay in drawing mode. Boom, that's our highest. Okay, that's our highest level. All right, so now we want to work our way down, all right, from the very top, working our way down, all right, and wherever we see the price reject, that's where we want to draw another line. Okay, so here's one here, price rejected right there. All right, keep on coming down. Okay, here's another level here. You can see price rejected here, and then when price broke, this became support. You see that? See how it's respecting that? You can see in between the levels, so the stock is playing in between the levels, all right? All right, let's come on down a little further here. Our next level here, boom. See right here, we got a touch there. And then we have some consolidation around this area here. All right. And then, boom, right there. Okay, so we can get a little finer with our levels now. All right, because we're really far out here. Because if you look at this, you can see the pricing is really spaced out. So we have the top of our chart, the resistance being at 288.62. So let's make sure that's there, 288.62. But then we have our next level is way down here at 262. Okay, so what I like to do is I like to move in now to the weekly and then to the daily, all right, to get a better idea of our levels and our intraday levels and things like that. Let's get rid of this one. I don't know how that got there. All right, so now let's see. Now we can see a lot better how the price is constantly trying to push up to these next levels, and when it doesn't, it pushes right back down to our previous levels that we've marked off. See that? Boom, boom, and then when it breaks, it goes. Okay, and when it rejects, it comes back down. All right, comes back, same thing. You notice that, right? You see that? See that pattern there? All right, and then boom, breaks, hits there. So now we have a way of anticipating what the stock, not what the stock is going to do, but when the stock is going to move. All right, so we're not trying to predict where the stock is going per se. Right now, we're just trying to find price action. We just want to find out where the actual stock is going to have liquidity. Okay, so we want price action. We don't want to trade in between price action. Okay, trading in between price action means taking this trade here. All right, you could day trade this. All right, but I prefer to swing, and I prefer to do it off the levels. All right, I prefer to see a rejection here, and then I like to see a retest where we attempt to come back up, and then when we fail, boom, then yes, you can take that trade. All right, but you can't take this trade simply off of one candle. All right, you have to start at the level to understand what the stock is getting ready to do. Okay, again, another example. All right, the stock pushed up to this price, 195.94. It rejected. Okay, it pushed back up, but it didn't give a clear rejection. All right, you could have taken a small little trade here, but that wouldn't have given you much. And then guess what? Boom, it came right back up. So you have to be very careful. But the thing I like about this is you can keep your stops very, very tight. Okay, so let's just say that we are looking at doing puts. Okay, if we get puts after this candle here and we get in right here, we can put our stop loss right here at this level. Okay, that way if we're in puts and it tries to push up here, we don't get stopped out. All right, we know that this is our level, so we can continue holding even if we're in the red. Now we're negative. All right, but guess what? You hold on, and then we have a bearish engulfing right here. All right, and then guess what happens next? Boom, we come back down, and you have a nice little profit. Take your profit. Okay, and then you see that the price returns back to that same level, and it keeps doing this little consolidation dance, and it's just playing around this level. When I see something like that, I'm getting ready to get in the calls, because anytime you have 1, 2, 3, 4, you have multiple touches on the same zone, the same price, sooner or later you keep knocking, that door is going to open up. All right, so you see this break right here. All right, now you could wait for a retest, and it does retest, and then it goes, but I would be just fine at getting in at the bottom of the next candle. All right, I want to see a nice bullish candle. This will be your confirmation, and then after that you wait for the bottom of the next candle, and then you enter, and then you set your stop loss below here. Okay, you can give it a little room if you want, being that we wicked right here. You could even set your stop loss there, but it gives you an idea. You're not blind anymore. You're not flying blind. Like, you're not trying to guess and figure out where to put your stop loss. You know exactly where to put it at, because you know if it starts heading back down this way, then this now becomes resistance. Okay, so we want to stay, when we're in calls, we want to stay above support. Okay, so this is support now once we break. All right, and then you see what happens. Boom, we go to the next level. So that also helps you to figure out where your targets are. Okay, so the next thing you have to understand. Oh, well, let's back up. So we talked about time frame. All right, making sure you're on the right time frame. Okay, we talked about understanding the levels, making sure that you have your support and resistance set up. Okay, I just showed you how to do that. Okay, next is the RSI indicator. All right, RSI indicator, and it's this indicator right here. You can add this to your charts, and I'm not going to really go into detail about the RSI right now. I have other videos where I talk about the RSI in my Discord. The link is down in the description. You can go and check that out to better understand the RSI and to understand candlesticks and anything else in this video that's not making sense to you right now. All right, so the RSI is your relative strength index. All right, so it basically tells you the relative strength of the market or of the particular instrument that you're trading at that time. Okay, depending on the time frame that you're looking at. So if we're looking to get into a stock that we want to purchase, okay, we want to make sure we're buying low and selling high. All right, so if we want to get into this stock and we've done our due diligence, all right, and we see, let's go ahead and back this out a bit. We see that the stock is at a high right now. Okay, it's at an all-time high right now. That's not the time to buy that stock. Okay, you don't just buy it because you want it and it's a good company. All right, you have to be patient. All right, you have to find multiple stocks that you like, and you have to put them on your radar. All right, put them on your radar. Set alerts. And you have to put money aside so when the opportunity presents itself, now you have cash on hand and you can do what you need to do to get into that position. All right. So let's look at where we should buy. Where do you think we should buy? All right. At the very least, you want to buy here, 195. 195. All right. Now we may not get 195 anytime soon, but it's coming. It's coming. It's the stock always returns to a price that it has reached or left behind. It's going to always come back. Okay, it reached this price, this level, it went up, but guess what? It came back. Okay, and you can see that it's coming back to this line, this trend line. All right, so our next trend is going to be a downward trend to come bring us down into our upward trend line, if that makes sense. Okay, if we continue to reject this 288.62 and we break below 260, okay, we are coming back down to 195 or that area of 195 or pretty close to 195, 196, maybe even up in this area here to the 210 area. So this is what you can do. You can go ahead and you can draw a text box. Where is it at? Here we go. You can get your not a text box, but a rectangular box. This is what I like to do here. And I'm gonna show you exactly what I'm doing here. I'm gonna change the color of this. All right, so this is my zone. So this is my buy zone for shares. Okay, this is for shares. This is not for calls and puts. All right, so what I did was I took the bottom of the body, okay, of this candle, and I took the bottom of this body of this candle that's below this level here. All right, and I marked that off because I have 1, 2, 3, 4, 5, 6, right here, 6. I have 6 touches. All right, I have 6 different instances on the monthly time frame where price reacted to or it was affected by this level. Okay, so at this level at 210, okay, price rejected. Okay, it went up to, looks like 218, but fell to 210. All right, and then the next candle opened and it blew up from 210. All right, but then we have a candle here. When it came down, it tried to get back to 210. This candle here, Same thing, it's trying to get back to 210. This candle here, it got pushed down, but it came all the way back here, and it still closed red, but it closed above 210. Again, right here, when we finally took off, it came back down. Well, it opened here, and it went up. It came down eventually, but it went all the way up to 234 after it hit 210. Okay, so that's a big jump. That's a big jump. So those are what I like to call areas of interest. Okay, when I have that amount of touches, if I see candles wicking into those areas, especially around where we have our levels marked off, that's a strong indication that we're going to see some level of price action again when we come back down to this area. So what you do is, let me delete all of these alerts. What you want to do is you want to come in here and you want to set your alert, create an alert below 210.66. All right. You also want to create another alert right at your level. Create an alert below 196. All right. Because what we plan to do, if we're buying shares, we're going to buy shares here at 210. And if it keeps going, we're going to invest more at 196. Okay. Now, if we enter a downtrend and we break this uptrend, okay, which is very, very possible. You see this here? We break this trend here. What we do, and I'm kind of getting off topic here, but what I would do is I would continue to hold my shares, continue to buy, but when I buy now, I'm buying at these levels. All right, I'm buying at these levels. We can even find another. Let's go down to the weekly. We can even come down here and find more areas of interest. Let's see, we have 170. It's 170-ish area, 163. Okay, I'm basically looking at where the price is reacting. You see that 1, 2, 3. Okay, so you can even mark off another buy zone there, or another level right there. All right, let's see. Boom, boom, boom. You see that? So you can buy again at 163. Okay, and then if it continues to drop from 163, you continue to buy. Because what's going to happen is this. You see the RSI, all right? I know I kind of got off with the RSI. So what you see, the RSI is oversold, overbought. I'm sorry, it's overbought, which means it is above 65. If you look over at the side here, see these numbers off to the side? It's up to 70. Anything that's like above 65 to 70 and above is extremely overbought and it's getting ready to come down. Okay, and I'll prove it to you. Let's look right here. All right, this candle right here, it rejected 260. Okay, and if we look all the way down at the RSI, what is it? It's overbought. Okay, so what follows after that? Stock comes down. Okay, the stock comes down. You see that? All right, now it did not come all the way down. All right, but over time it will. Okay, what goes up must come down. All right, it always does. It always does. So if we look at it on a weekly time frame, we can see, all right, that same position on the weekly came all the way down. What happened to the RSI? It came all the way down to 30. Okay, so on the RSI, the 30, when I'm talking about 30, I'm talking about the values off to the right. You see that right there off to the right? See this right here? 30. All right, you see where we are? So that level is a buy level on the RSI. That is a buy indication, okay? And if you look at the chart and you see this here, this is where people bought. You see this green candle that's almost right on top of this RSI. You see that, right? So it's not only is it a green candle, but it's right on our trend line. You see that we just drew. This is back testing. Okay, so we see that, and then what happens? What goes up must come down, and what is down has to come up. So from there, guess what it does? It goes all the way back up. to that 70, that 68, 70 range, and look at where we are. Now we're overbought again. Okay, so we looked at this on the higher time frame. Okay, we looked at the levels. Now we understand the levels. We looked at the RSI and how to understand when to buy and when to sell. Okay, you sell when it's high. You sell when the RSI is at 70. You buy when the RSI is at 30 on a higher time frame when you're dealing with shares. Okay, now I want to look at where is my 200 moving average at, moving average, and I want to also look at what the candlesticks are showing us. That's going a little bit deeper, but I'm just going to touch on it real briefly. So let's just pull up our indicators. So we have our moving averages. Okay, and again, if you don't understand what moving averages are or how to read them, you can click the link in my Discord, and there are some videos from Black Girl Stocks. She's really good. I watched her videos when I was starting out, and I put links to her videos in my Discord, and I also have my own videos that I've done as well that can help you out with some of these things. Okay, but we have the 8-day moving average, we have the 20-day moving average, and we have the 50 and the 200. Okay, so this right here confirms exactly what I've been saying. All right, the 200-day moving average basically shows you over the course of 200 days what the price has been doing. Okay, and basically what you see is this 200 moving average. If I back out, it's almost in lockstep with our trend line. Let's change the color of our trend line so we can see it better. All right, you see that our trend line is white going all the way up here. All right, and then our moving average line is green. And this is how you use this. So anytime you see price above this 200-day moving average, you're in bullish territory. Okay, price is up. So it's safe to say that you're going with the trend if you're buying when price is down at the 200 moving average and it's getting ready to take off. Okay, so in this example here, we can see where the 200 is. All right, it's exactly where we drew our trend line, right? So what we can expect is for this price to come back down. This moving average is like a magnet. Okay, it's a magnet. All right, so you see here, price just wanted to stick around while it traded sideways, but then when it took off, it took off. But guess what? It always comes back. Then it took off again, and then guess what? It tried to come back again, and it failed, but it took off again, and then guess what? It finally came back down, and it finally was able to hit it. But then it took off again. So what do you think is going to happen now? All right, this is since 2019 has been doing this exact same thing. So there's one or two things that can happen. It can come back down here eventually for us to buy it, creates buying opportunities, and people like us are watching and waiting for this stock to come down so they can get into this company. Okay, so you buy here, and then guess what? The stock is going to head right back up. Now that doesn't mean it's going to do it in an instant. All right, we're looking at weekly time frames, monthly time frames. That means each one of these candlesticks represents 1 week of time. Okay, 1 week of data. This moving. If I'm looking at the monthly, okay, each one of these candlesticks represents a month's worth of price data. Okay, so you can figure here that it took, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It took a long time. All right, it took like 16, 17 weeks for it to even break out of the zone. All right, so it takes time. So you have to be patient. That's why this is the long game. All right, so you invest, you save your money, and when you have a stock like this that comes down, you have alerts that go off, they get triggered, you take your money and you invest your money into something that you've already done your homework in. And when the stock goes up, you can reap the benefits on top of getting your dividends and all those other great things. And in the meantime, while that stock is going up, there's something else coming down, and we're going to catch that. and you just keep rinsing and keep repeating. All right. To understand candlesticks better, check out the Discord. There's a candlestick chart that you can download for free. It's a cheat sheet. I recommend that you grab that. Also, if you want to watch one of the videos, there's a great video in the Discord that shows you how to read candlesticks and candlestick charts. All right, I hope you guys got something out of this. I hope it helped. Give me a thumbs up if you like this video. If you got anything out of it, make sure you subscribe and share with about 5 other friends that you want to help to learn how to get into investing. All right, God bless you and your families.